All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all, and it's time to get started with our morning analysis. So let's get to it. So here's the euro dollar. Oh, here, you know what? I need to grab the bias chart really quick. Let me grab that. Give me 1 second. Okay. Pulling up the bias chart right now. And let's start with the euro dollar. So the euro, you know, as Paul pointed out, it's just there isn't a whole lot of direction here in the euro at the moment, and it's a tough read because it's getting stuck in the cross currents. All right, and that's really, you know, you look at the euro dollar, it's like, okay, well, what am I going to do with it? I don't really understand. You know, should I be buying or selling it? Because it's just, like I said, it's being just kind of drowned out by all the other moves that you're seeing in the Canadian, the Aussie, the Kiwi, and you know, we might be sitting here just building up a nice consolidation in the euro dollar. I mean, if you take a step back and look at the 4-hour chart, you know, we may just be building this consolidation, which suggests that, you know, a break above the highs here at 109.40 right here would give us a breakout, you know, up towards the upper end of that resistance, and then if we break below here, we're probably going to test some of the support. So, you know, the 110.50 or the 107, those look, in my opinion, doable. And oh, ERW says happy Swiss National Bank peg drop anniversary. It is, isn't it? Holy cow, it is. Didn't even think about that. It is. Yeah, I guess today was the day a year ago when the Swiss National Bank dropped the peg. Oh, wow, wasn't even thinking about that. All right. Anyway, so resistance here at 109.40, support at 108.30, and I think those are the prices we just have to pay attention to. So 1.0830, and perhaps we break today, but like I said, all the attention right now is elsewhere. It's on all these commodity currencies, right? So we are in a range. Let's go look at the cable. Now the pound, on the other hand, now that's been a mover, and the pound continues to break lower. Look at the pound dollar. So the pound dollar just, you know, nonstop bludgeoning here in the cable. We can't get out of our own way. It's, you know, whether it's wedging or whatever, we're approaching some serious, you know, lows down here. If you have to go all the way back to the lows that were posted back in 2010, you know, that comes in at 142.25. You know, we're 100 pips away from that right now, and I don't, you know, with the euro pound rallying aggressively, I don't really see that stopping. You know, if you take a look at the euro pound continues to rally aggressively. So now, you know, we have to, here, let's remove that, and let's go over to an hourly, and let's see if we can get some sort of trend line drawn on an hourly. And it looks something like that. So as long as we stay below 144, now if we can break above 144, you know, and we get like some sort of false breakout, which is possible. I mean, you know, like I guess I would keep support like right here, or previous support right there. If we break above 144, it'll get a nice reversal, but 144, as long as that's capped, it's bearish. Okay. You know, support, let's go, support is at 142, what was that number, 142.20? I mean, I guess we gotta clear 143, but 142, $142.26, so 142.25, 43. Okay, so 143 will be also support there. Let's go take a look at the Swissy. So the Swissy is just kind of stuck in the crossfire as well. So here's the dollar Swiss, and the dollar Swiss is just kind of stuck here. Support, well, support's been holding at the 38% retracement. I thought we might come all the way down towards this this 96, 99, 60 level. But we're really just kind of holding this 38% retracement. I thought we'd get a boost down or get a push down here. But I think that has to do a lot with risk aversion as well. So we'd have to see the market get a little bit more risk averse, and if that happens, then we might see a spike up, but or spike down if the market gets more risk averse, which is entirely possible on a day like today. S&P sitting close to support here. So, if the Swissy breaks this low, which is 1.0010. Basically, I'll write that down as support, 1.0010. We're still range here, and resistance. $1.0075 is resistance, and we're in a range with the Swissy. Let's go take a look at the yen. So, with the stock market as heavy as it is, the dollar yen is actually holding up pretty well. Okay, if you look at the dollar yen, it's not breaking down, nor is the S&P. We are on support right now. This is support that we marked down yesterday. Here, let's remove that and put in a red line here. Okay, same line, I just changed the colors here. So we're on support. If we break this, which will be 117.20, then the next target would obviously naturally be 116.75 or 116.70. So I'll have to write down both. So 116.70, 117.20. All right. Because you can see it right here. We're just, actually this obviously this didn't, because we've been on both sides of it, so now we're more just range bound. All right. Resistance. Yeah, I'd like to say resistance is all the way up here. I just don't know if we're going to, get up there and test those levels today. But I'll have to write down 118.30 because that was obviously key resistance on the way up. 118.30. I was really hoping we'd get a move back up towards 120, but that's just not the case. Let's go take a look at the Canadian. All right, so the dollar Canadian is trading above 145. Now, the dollar Canadian exceeded where I thought it was going to go. The 261% extension was at 145.20. The 786 retracement on a weekly chart. So you have to go all the way back out to the weekly chart. That's from, oops, actually I think it's higher. Yeah, it is higher. It's at one, so I had those numbers off. Hold on. Actually, we got a little bit further to go. It's at 146.70. So we have met the 261% extension, and I guess the chart that I want to show you is the 6C. If you're running a little bit late and you didn't see this from earlier, here's the 6C, which I blogged about, I think it was yesterday or the day before yesterday. So we have the A, B, C, D equal leg moves. So here's your 4-hour chart so you can see it a little bit better. Okay. So A, B equals C, D, and we're here. Now the thing is we haven't shown any bounce yet. All right, gonna have to see a pretty big bounce and reversal. I mean, we've gone just in the last, I mean, since the beginning of the year, we've gone from 72 cents to 68 cents in the Canadian commodity contract. I mean, that's a huge decline. You know, we've lost nearly 5-6% of the Canadian currency's value just since the beginning of the year. So real big moves here. You know, I assume we're pretty close to a bounce zone around here. Like I said, is it the overall low in the Canadian currency? I don't think so. I still think the dollar Canadian is going much higher. You know, up towards 155, actually 155.50. But you know, after a big sweeping move like this, we're probably due for some sort of consolidation. You know, maybe even a bounce. Like the previous consolidation just leaves us to a consolidation, but maybe even a bounce from here. But we'll see, because I think a lot of that depends on crude oil, and obviously crude continues to get beat up. All right, so when you're looking at the dollar Canadian, all right, the resistance for today is going to be the high, the spike high, which obviously that was like an emotional kind of, you know, tripping stops type of move. So 145.46 will be the high today. That will be resistance. 45.46, that'll be resistance for today. It's still a very bullish trend. And let's take a look at where support might be. So support is all the way back at 144. That's where support is for today, all the way back to 144. So we can't take the downside pressure off as long as we're still above 144 at this point. All right, let's take a look at the Kiwi Dollar. So here's the Kiwi. And the Kiwi, I mean, this breakdown was pretty severe. We took out the new trend lows. You can see that at 64.25. We held that resistance pretty strongly, and so now I'm going to have to remove that. You know, on the rallies back, the last couple of days, couldn't break back above that 65-cent level, and then obviously we just took out the lows. Now, this is the thing about the lows here is you can see it's not divergent relative strength. This is a new low in price, a new low in relative strength, right? Which suggests that the Kiwi dollar is extremely weak, and I don't know, you know, I don't know if we're going to see any you know, strong bounce. In order to get a reversal, we have to get back above 64.25. So as long as we are below 64.25, it's bearish. Okay, so we've gone out of a range to a bearish trend. The Kiwi dollar support, let's go see if we can find some support here. And the scary thing is we have this double top. Okay, you can see that double top here. Double top breakdown. I mean, that leads to a lot lower. So, you know, if you guys are out there trying to buy the Kiwi, be really careful, because it suggests that we're still going lower than where we're currently at. So let's go from, which I'm happy about, 63.78. So 63, just call it 63.75, which we're currently on, is a 786 retracement of the low here. Now, if you ask why I don't measure the low over here in August, is because I don't know where that, I don't know, that low is not the same on my chart that it is on everybody else's chart. So if you go over to like the, let's go over to, here's the New Zealand dollar. See, this low right here is different than the low that I have. And that's why it's a different measurement. If you measure, see this one right here points at 6350. But if you take my measurement, the 786 comes in over at 6270. All right, so 6270 versus 6350 is a much, much different price. See, Nick has a low of 6087 for that low. I mean, that's probably close to the low that I have, 6087. I have 6098. So, you know, which number do you use? You know, I mean, and you know, so we, because we're different brokers, it's like it's all going to give us crude new lows. Crude new lows, and the Canadian did hit new highs. That's good. Whew. Okay. Thanks, George. Um. Anyway. BG asked, "Hey Blake, where's my stop loss on my dollar Canadian?" It's above 146 because I've actually added to my position today. So, but you got to stay wide, man. You got to stay wide, and you got to stay small. Don't be looking at big size positions here. So here's the Kiwi dollar. Going back to the Kiwi, I really don't know where support is because it's going to be hard. It's going to be a hard measure. This is an accurate measure from this low, so that's why we can say we're at support right now. But you know, this 127% extension seems like a more viable target to me, which is a 63% extension, or I'm sorry, 127% extension. And it's also an 88% retracement from the low to high here. So 163, or excuse me, 63 seems more doable. Okay. Let's take a look at the Aussie. Aussie's a very similar situation. And here's the Aussie dollar. Now the Aussie dollar breached new trend lows, which, you know, is scary because if you look at the Aussie dollar and you look at what can happen here, I mean, if we close down here today, we are threatening longer term, like a much longer term breakdown. Okay. And let's take a look at a couple key supports here. The chances of us, or the potential for us to head down towards the 60-cent level is really high if we maintain this breakdown, especially over the course of the next week or two. All right. And, you know, there's been a lot of people trying to call an Australian dollar bottom, but look at the charts, guys. I mean, a sell-off, consolidation, and, you know, here we are selling off again. It looks dangerous. Stand by. Sorry about that. Okay, so I don't even know where support is now. Let's go try to figure that out. First of all, 69 cents is resistance. 69, I would say 69, whatever this is, 69.10. Okay. 69.10. Now support. $0.68 there. We take this last consolidation. $68.50 is the 161% extension of this last bounce. Let's double check that really quick. Yeah, 68.50 here. Hold on, really? I still have to do another one. $68.50 is double 161% extensions down here at $68.50. That's going to be support today. It's not great support, but it's support. It's two intraday 161% extensions. So the question will be, will the Aussie and the Kiwi be able to recover those losses? Because those losses, those are really big breakdowns if they hold. Okay, I'll be back in a few moments. Don't go anywhere. When I come back, we're going to do the dollar index. The peso is above 18. The U.S. dollar Norwegian Krona still has not bounced with crude oil. And then we got the U.S. dollar Swedish Krona. So don't go anywhere. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session, and let's get over to the dollar index here. The dollar index has just kind of been stuck. It's kind of like the euro dollar. It's just been just stuck in the crossfire, between dollar yen going down, euro dollar, kind of floundering around, and the commodity currencies moving. I mean, the dollar index just hasn't had a lot of direction, and I think we drew this yesterday, but I believe that this is still the case. We obviously have retail sales here in the next 29 minutes, so the thing about retail sales is it probably will end up pushing us to the edge of this triangle. But here we are, before the biggest news event of the week, okay, and we're like really seriously just stuck in the middle, and so a move above 99.25 or a move below 98.50, what is it, 98.50, 98.60? I mean, that's really what will be required to get the dollar index moving. So let's write down 99.20. And then 98.60. And we are in a range, okay? So the dollar index, like I said, it's stuck in the crossfire right now. Now, we might break today. I mean, again, I don't know if retail sales and producer prices is the caliber of data that we need today to break us higher. But like for example, retail sales are expected to come in slightly lower than expected. So, we might, and this is for December, okay? Retail sales already expected to be fairly weak, and maybe we get an upside surprise. What's it going to do? I mean, what's it going to do to the dollar index? Is it going to push us, above 99.20? I doubt it. I'd actually argue that maybe producer prices are even more important than retail sales this time around, because everybody's focused on inflation. But regardless, what I would be thinking here regarding the dollar index is we are trapped in this triangle, and the triangle may break, maybe sometime next week. I don't know if it's really going to break today, but you'll notice we are mid-range, between our marquee event of the week, which is retail sales and producer prices. All right, let's take a look at the peso. I do have a short on the Mexican peso. I've scalped this thing like crazy, and what I don't want to happen is I don't want us to close above 18. All right. We are building this wedge, and I've traded it to the short side like 3 times this week. I shorted it like here, shorted here. I've made a lot of pips just shorting it from 18 or 1797, and currently we're in breakout territory, so we have to get below 18. If we close above 18 today, I will close that one out for a loss, which is fine because I've had 3 really nice gains with it. So if I take one as a loss, I'm not really too worried about it. But we're probably getting close to an extension here. So let's take a look at well, there's 127% extension of the range. And 161% extension takes us to 1816. Okay, so US dollar, Mexican peso. And it's still bullish. I mean, when you're trading these things counter trend, just take small positions. That's the way you trade them. 18 is going to be support, and 1816 is going to be resistance. All right, let's take a look at the Norwegian Krona, the next one up. So the Norwegian Krona, once again, it's really interesting that the dollar has not strengthened against the Norwegian Krona with crude oil rallying. Now, one of the charts that we were looking at yesterday, and let's take a look at it. This is the Norwegian Krona Canadian. Actually, let's do it the other way around. Canadian, Norwegian Krona. I mean, this is just it. This is pretty wild chart here. So here we are dipping, and I don't know where channel support is, but I guess we could arguably put it that it's right here. But you can see the Norwegian Krona is really strong against the Canadian. So we continue to see that divergence. And so if crude bounces, my assumption is if crude bounces, the Norwegian Krona is going to strengthen even further. But here's your 4-hour chart. Okay. You see the US dollar Norwegian Krona, we broke out of this ascending wedge, and you can arguably say, depending on how you want to draw this, you can arguably say we're back testing this trend line. But I think where you start to see the breakdown point is at 875, because this is the low that we put in Asia when there wasn't a lot of liquidity. But like I said, with crude oil hitting new trend lows, the fact that we haven't broken down further with the US dollar Norwegian Krona is, in my opinion, extremely impressive to me, showing the resilience of the Norwegian Krona. So resistance here is 884. Support is 875. $8.75. Okay, and it's still in a bullish trend. We're just teetering on, trying to turn. Okay, but we're still in a bullish trend as far as the Norwegian Krona goes. Let's go over to the Swedish Krona. No, I don't think the Swedish Krona has moved at all. This is like same thing with the euro dollar. We're just kind of stuck in the crossfire here. But watch this U.S. dollar Swedish krona. You got to watch it carefully, because if the dollar does start to pick up some steam, it's kind of the unnoticed ones, like the U.S. The one that's kind of flying underneath the radar. I mean, you look how bullish this structure is longer term. Here's the daily chart. Here's the consolidation. And you see what it's doing right now. If the dollar starts to rally, especially against the euro, I think you got to really, um, um, uh, you got to really like just kind of um, look at the potential of a big rally through this resistance that'll take us to new highs, especially if the dollar starts to gain strength against the Swissy, the euro. It's already building against the pound, but because you can't really use this in terms of commodity currencies. All right, but that's what I'd be watching here with the Swedish krona. It's quiet, but it's not going to stay quiet forever. All right, so our bias chart is done. Let's go ahead and answer some questions. And we got about